Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro-US dollar FX for Thursday, June the 18th. Well, a change of character for this market today, and as we've seen with previous markets, the candles instantly tell us what the character of the market is, and we can tell that by the color of the candle. So the color is red, which means that there's been some net bearishness in the market. Previously we had two bullish days, we had a new first time frame uptrend here, we had green candles, nice bullishness here, and we had the size of the body increasing. All of a sudden we have a red candle, which means bearish, and a very small body, so a net reduction in the body. That means that the bulls have lost control. They're not committed to, or they weren't committed on the day as they were previously. But if we look at where the candle closed, the bears have some sort of control, moderate to strong control, not very strong control. We'd like to see them close down near the low for strong control, so it's fairly strong. They've closed in between the mid-range and the low, and they've shown some sort of commitment as well. Now, interestingly though, the first time frame uptrend is still intact. Still intact. So we have a higher high and a higher low, but importantly we have what is some sort of a spinning top candle, not quite a perfect spinning top, but some sort of a spinning top candle, which means some sort of indecisiveness in the market as well. Now, if we look at our configuration of peaks and troughs, we have a series of lower peaks and lower troughs, which means that we have a second time frame downtrend, and here this is a retracement in that second time frame downtrend, and naturally we'll be looking for the downtrend to continue on its way. So all of the bullishness that we had in the market has evaporated, so the likelihood is that the low of the current candle will be taken out and the market will sell off and trade down to this area. Now, the area here, well, actually the area at the neckline that we identified that we couldn't take out previously becomes important for the market. We'd like to see a strong close down below that neckline. We also have the swing low here, which will act as support now. We need to take that out. We then have the region here of the previous resistance, which can turn into support. We need to watch that for support. We have this area of the swing low here, and then we also have the interaction with the cloud. We know that the cloud or the Kumo can act as support. So if this market does sell off, it'll have to do a lot of work to get down through these areas of support. Now, obviously the trend is up in the first time frame. If the market does continue to trend up, we have very, very strong resistance up above. So we have resistance from these candles here where they sold off, and up above here, and even higher. These two coloured zones we highlighted previously as areas of resistance. So even though we have strong support down here, if the market sells off, we have strong and much stronger resistance up above. So it's unlikely that the market will trade up past these levels. It's more likely that the market will trade down. And remember, we are in a second time frame downtrend, and we know that the trend will continue unless we have proof otherwise, and we don't have that proof at the moment. A candle like this is not enough proof for us to confirm that the trend will continue up. It raises doubt about the strength of the uptrend, and it tells us that there's a very strong chance that the first time frame uptrend will terminate, and that the higher time frame trend, the second time frame trend, will continue down on its way. So importantly, the candle of today's price action, the low of the today's price action becomes very important. That needs to be taken out to the downside, and then this swing low and the neckline here. We need to have a good strong close down below there for the downtrend to continue on its way.